go back to the time we were here, where mortgage lending was at the heart of the financial crisis, and borrowers of modest means received risky, subprime loans they couldn't afford as financial companies chased profits and left taxpayers on the hook for the downside. And we know the damage that the crisis caused. Families lost their homes, their jobs, their savings. Businesses had to close their doors, and communities were devastated by foreclosures. So the crisis reminded us as how important a healthy mortgage market is to our economy, not just to financial stability, but to families' ability to build wealth and strong communities. And as our economy continues to recover, the pathway to ownership, I believe, must remain open and affordable. Now, I understand no legislation is perfect, and in areas where regulations are an obstacle, we should look to improve them. At the same time, it can be tempting to blame regulation for broader market challenges, or to use unrelated problems as a pretext for rolling back consumer or financial stability protections. So I look forward to working with my colleague on the committee to find ways to improve access to credit, but to consider all the elements of that. In that context, Mr. Woods, in your testimony, you discussed the recent moves by Fannie and Freddie to back well underwritten loans with down payments as low as 3% in cases where borrowers can demonstrate their ability to repay and other compensating factors. As I think almost everyone here knows, saving for a down payment can be a significant obstacle for a family to purchase a home. Would you say that this decision by Fannie and Freddie represents a positive step by giving a greater number of credit-worthy borrowers an opportunity to responsibly and affordably purchase a home?
It is a very responsible, I would say it is a very positive step. Mm-hmm. There's one indicator out there that for years stands out. When we talk about the 3% or 2% or wherever you're at, VA loans perform quite well, and there's zero down loans. And they've always performed, but they have some other guidelines within them that help that process. Plus, that individual has some training and responsibility.
Mm-hmm. Do our other witnesses agree?
Absolutely. I think that the ability to get a home with a lower down payment is absolutely critical for today's home buyers. And, you know, I want to note that what's really important when you're thinking about lower down payments is making sure you're not layering other risks in there. It wasn't low down payment products that caused the crisis. It was the risk layering. And so that's why, especially when it's so important right now to have these low down payment products, because families really don't have that much wealth, that's why it's absolutely not the time to ease up on the other protections.
Senator, I agree with Ms. Gordon completely. As long as the 97% loan is prudently underwritten, we're not layering risks, I think it is a good step toward reviving the housing market. Mm-hmm.
And Senator, I would concur. I would also add that the lowering of the FHA fees from 1.35 to 0.85, you know, on a $200,000 house made a difference of $90 a month. And it certainly brought more first-time home buyers into the market.
Good. Now let me ask you another question. Almost all of you discussed in your testimony how updated credit score models can improve loan underwriting and expand access to a broader population of potential buyers, particularly in underserved communities. The developers estimate these new models can provide scores for anywhere between 15 and 40 million previously unscored consumers. So can any of you share with me what are the biggest obstacles to widespread adoption of the newer, better models? Is it implementations by the GSE, or is it other factors?
In my opinion, it's implementation by the GSEs. They just haven't gotten around to technologically utilizing those models.
Well, there are some other obstacles as well, which is that, you know, particularly rent reporting, which is a big part of the newer experiments with scoring more people. You're relying on a lot of private landlords, often, you know, mom and pop landlords, to do that reporting. And I think that's going to be a challenge to make sure it's done right. But I think it is really important and will allow many more people to be scored. On scoring utilities, I think there are some special problems there that you have to really make sure you have consumer protection. Many folks benefit from utility subsidy programs, particularly in the colder states, and utility companies are well known for a lot of billing problems. So this has to be done carefully, but I think both FICO in updating their models and Vantage Score have been really working on this quite carefully, and it is very important that Fannie and Freddie, get contemporary with this.
Thank you, Mr. Chairman.